For today's discussion, we're going to be having a discussion on the ABCDs. So before we begin with that discussion, let's just do a little check in the room. Is there a specific currency pair that anyone wants to work on with respect to identifying the ABCDs? The methodology is going to be the exact same on any currency pair, any time frame. All right. Deb says, how can I download the UTP 2040 PDF? Deb, to my knowledge, if you go into the UTP 2040 section, if you pull up any PDF, right? If you pull up any PDF, for example, let me see if I can locate that really quickly, because not everyone has access to the UTP 2040 area, although you should have the indicator itself in your charting software. Not everyone has access to that portion of the education, because it was like on for a little bit and then disappeared. And I'm not really sure why that is. Let me go down here and locate that. Oop. Okay, in the 2040 section. Come on. Okay, so if you're in the 2040 section, when you go right here, there's a 2040 manual. You click on that, and it'll open the PDF. Usually looks something like this, right? So whenever you're dealing with any kind of PDF document, they usually, it usually looks exactly like this. The sides will be gray, right? And if you leave the mouse alone, nothing happens. You see, if you leave the mouse alone, there's no options. If you move the mouse, you see how this kind of came down and these options came out on the side? This button right here, the down arrow, is the download button. Right? If you hover your mouse over it, it'll show you kind of what it is. So the down arrow for download, the printer icon, if you leave your mouse over it, it'll tell you what it is, print, etc., etc. Most menus or most things on computers nowadays, they'll have that little thing that pops down, and it'll kind of let you know what it is. All right. So yeah, to download that, just click on the download button. Any questions on that before we get started? Okay, so the first request here is from Alan. Alan wants to use the Australian dollar, Canadian dollar. Okay, Alan, perfect. Alan, do you have a time frame? Does anyone have a time frame that they would prefer for the Aussie CAD? There's a question here from Mohammed. He says, how can I earn while I learn? Mohammed, while it is entirely possible for you to earn while you learn, you have to learn the strategies. It's my belief, my personal belief, that although you can earn while you learn, I think that you're best served by just taking a minute learning what the market actually does. Okay? It's very, very easy to earn while you learn, but you have to stick to the rules. And our tendency, especially as new traders, is to start to experiment. Okay? So as you're learning new trade strategies, I would encourage you to trade on your demo account first, so that you get used to the trading methodology, so that you get used to how the market works, and develop your consistency rather than risk your funds. I think that's the more intelligent way of going about learning how to trade. All right. As far as a time frame is concerned, let's go with the 4-hour chart. We almost never use the 4-hour chart, so I'll go ahead and I'll open up a chart here. What we're going to be talking about is how to plot the ABCDs appropriately. Now, for those of you that have had the opportunity to use the Ultimate Charting software, by now you've probably come across the Smart Fib tool, all right? And we'll talk about that later on. But for now, I believe that it is of the utmost importance, especially for those of you that are not using the Ultimate Charting software, to be able to appropriately identify Fibonacci's, identify trend direction, and be able to plot them correctly. All right? If in the event that you for some reason are not in front of your computer and are not using your Ultimate Charting software and you don't know how to plot a Fibonacci, you have no idea what you're going to be doing, right? You're not going to be able to tell where the market's going to go, where your target is, et cetera, if you don't understand how it is that this works, all right? So if you take a look at any currency pair, any time frame, we're going to be following the same methodology. I've shared a document with you all, this document that I've written up, right? This is my own personal write-up of the ABCD rules. And what this contains inside is a very detailed explanation of the ABCDs. The Ultimate Traders Package, the way that it's written, is for simplicity. And some of us that are more detail-oriented, we tend to, when we see something that's simple, we think it's too simple, and we don't believe that that's how you do it, right? So we always look for more detail. As a result of that, I've written these out. All right? Now, here's what we need to do, right? The very first thing that we do when we take a look at a currency pair is we want to be able to identify trend direction. And the only way to do that without a shadow of a doubt is to identify the absolute highest high and the absolute lowest low of the chart. So that's what I'm going to do. I'm going to compress my chart. If by any chance you're using any other charting software, compress your chart as far as it will go, right? Right now, the Ultimate Charting software already does that for you. It opens up in a very zoomed out view so that you see all your candles. Octavio, you're very, very welcome. And we're actually going to be talking about that live tomorrow, so if you want to join me for that, you'd be most welcome. Actually, you know what? We can talk about that today if you like. All right? And then if we can follow up this segment with talking about the King's Crown. Okay? So here we've got the highest high and the lowest low visible, right? If we take a straight line and we go above all the candles, the first point that's going to touch is that price. And if I go below all the candles and start to work my way up, the first point that's going to touch is right here, this price. So the next thing that I'm going to do is I'm going to try to identify a trend line between these 2 points, because this is the longest running trend between the most extreme points of the chart. So if you were to take a look at this chart, what kind of trend line would you be able to draw between those 2 points? And if you have to get rid of everything else, because anything beyond that, anything before is irrelevant, and anything beyond that is a potential reversal. So if you just have to look at the information between these 2 points, what kind of trend would you say was in place here? Uptrend, downtrend, sideways movement? Absolutely, we've got ourselves an uptrend. So if we then are going to draw our trend line, we have to start at the lowest low in an uptrend. We start at the lowest low and we work our way across all of the lows, right, before the highest high. So I'll start here at this point and I'll stretch my trend line all the way across, and I'm going to place my trend line below all of the lows prior to that highest high. So here's the market touching the trend line. I don't want to break any candles. Anything beyond the lowest low and the highest high is a potential reversal. Any questions on that? Okay, so with this information then, if need be, again, do not hesitate to compartmentalize, ladies and gentlemen. Right now, this is my focus right here. I haven't yet arrived at the current market. My goal is to get to the current market, but I want to make sure that I've eliminated any potential other suspects of the trend that could be the actual trend. So since I have an uptrend here, I'm going to follow the rules here when it comes to drawing my ABCDs. Here are my uptrend rules, and you can download this from the handout section as I mentioned before, or you can screenshot it. It's up to you. I'm going to begin at the lowest low. That's going to be my first A. And I'm going to go to the first high, which is my first B. Lowest low to the first high. Okay, so let's take a look at the chart. I'm going to add the fractals indicator to make it nice and easy for everyone to be able to identify highs and lows. Okay. So now all my highs and lows are visible. And as we can see, we're over here. This is the lowest low. So I'm going to even get rid of anything that is not the lowest low. Just going to work my way to the points that I need. I need the lowest low and the first high. Okay, and here we are. Lowest low with 2 to the left and 2 to the right. First high, 2 to the left, 2 to the right. And I'm going to draw my Fibonacci. My Fibonacci needs to go from this point to this point. So I will get to my MTI retracement tool, or your Fibonacci retracement tool if you're not using MTI software. And I'm going to start at that lowest low, right? I'm using also the magnet tool. The magnet tool will attach any drawing tool to either the top part, to the wick high of a candle. See how it starts to highlight candles? And it will attach to a high if I'm above the candle. It will attach to a low if I'm below the highlighted candle. Right? So I use the magnet tool because it is precise. It attaches exactly to the height or to the low of the candle. So I'm going to use the Fibonacci tool with the magnet tool, and I'm making sure that I'm at exactly the high or exactly the low, and I'm going from the lowest low to the first high. Any questions on this? This is my first AB boundary, and I'm going to mark this out also. A, and this is B. So the next step then, with an AB boundary in place, is to identify, bring this over here, this is the origin of the trend. The next step is to identify the C retracement. And identifying the C seems to be the single hardest thing that traders have issues with. Okay? The textbook definition, the Ultimate Traders Package definition of a C in an uptrend is the lowest retracement nearest the A after the B. That's going to be the C retracement. Right? In a downtrend, the C is known as the highest retracement nearest the A after the B. Both of these things share one thing in common, and it means nearest to the A after the B. Right? So if you're going to think of the C, regardless of whether or not you're in a uptrend or a downtrend, your C must always be the nearest point to the A after the B. Nearest point to the A after the B. Any questions on that? Since C must be the nearest point to the A after the B, usually the question that comes after that is, can B and C be the same candle? Right? The answer to that question would be no, since it has to be the nearest point to the A after the B. B and C cannot be the same candle. Right? Although C and D can be the same candle. That's very rare, but it does happen. The A and the B are constant, ladies and gentlemen, and the C is a variable. Right? Since C must always be the nearest point to the A after the B, if the market goes to a deeper point, you have to update the C. For example, based on what we've discussed so far, let's go right back to the chart. If this is my A, right here, this is my A and this is my B, where is my C retracement? Perfect, Octavio, right? It's going to be this candle right here. This has the nearest depth, the nearest price to the A price after the B. If you must put a line at the B to make sure that you don't accidentally look at that or any other candles before it, then do that. We're looking from this line forward for the C retracement. When you draw an AB boundary, since you will automatically have 2 to the left and 2 to the right of the B, you will always have a C, right? You will always have a C. It doesn't mean that you have an entry, but you will always have a C. Any questions on that? So as of right now, this is the nearest point to the A after the B. Once we identify the depth of the C in relation to our Fibonacci, in relation to our AB boundary, which one of these levels it has touched, we can project where the market is expected to go based on how deeply it has bounced. We are expecting it's going to, or based on how deeply it has come down, we can expect it's going to bounce out to a certain level. So that's why the Fibonacci tool is color-coded to help you identify these levels. If this market has touched one of the red levels, right, the 382, the 50, the 618, the expectation is that it will bounce out to the 1.618. If it's touched the 786, then just like a ball being thrown into a hole, it's expended more energy on the way down, so it's going to be able to only bounce up less, right? It's gonna bounce up less high than it would if it had hit one of these levels. If it goes even lower than that to the 8.6, then it's expected to only be able to go to the 1.18. Right? So based on the depth of the C, we can project the D extension. And George has already given me a projection for the 1.27. Now, George, I'm glad you mentioned that. Because if we take a look, your Fibonacci levels not only give you a number as far as what Fibonacci level it is, or what percentage retracement it is, right? Because from A to B, that's your 0 to 100, right? And if the market goes, if this is my AB right here, right? If the market were to retrace down to the 382, you see how that's roughly about 38%. If it comes down to the 50, we got halfway, right? 618, about 62%, etc., etc. Right? So we're looking at percentages here with respect to the Fibonacci's. If it comes all the way to touch the A, that's a 100% retracement. That would be taking out the A. In addition to giving you these percentage numbers, 236, 382, 50, 618, it also gives you price points. Right? And if the market does not touch, the price point actually is the Fibonacci calculating. If it touches this price point, then it qualifies as this type of retracement. Right? It must touch this in order to become that. So if I take a look at this low, right, the current C, I'll click on the candle and I'll get the exact price point for the low of 0.9347 roughly. Right? Now if I take a look at this, the 786 price is 0.9344 approximately. Can I say that this market has touched the 786 price? This market has not touched the 786 price. Close, but not yet. Right? So since it has not touched the 786 price, I would still expect that the projected D extension is the 1.618. Right? Just going to be as exact as possible here. The 1.618 is the projected D target. Mohammed says C does not have to be 2 to the left and 2 to the right. That is absolutely correct, Mohammed. Your C does not have to have 2 to the left and 2 to the right. There will come situations where you will not get 2 to the left and 2 to the right. All right? So if you are looking for 2 to the left and 2 to the right for your C, there will come situations where you will not be able to continue your A, B, C, Ds. The only ones that need 2 to the left and 2 to the right are A, B, your first AB boundary, and then moving forward after that, you're looking for the D to have 2 to the left and 2 to the right. So, great question. C does not have to have 2 to the left or 2 to the right. Now, as I mentioned, we're going to be looking at the depth of the C, right? Based on the depth of the C, we just determined it's not yet a 786. So it's still a 618, the projected D target. Where the market should go, the projected D is here. The market will not satisfy the D extension until it gives us a high, like Mohammed said, with 2 to the left, 2 to the right in an uptrend, or in a downtrend, a low with 2 to the left, 2 to the right. So this is where the market is expected to go. If the market should exceed that, that's not our problem, right? But this is where the market is expected to go with respect to the Fibonacci, right? If we end up finding an entry opportunity and we participate, getting in at C and going all the way out to D, then fantastic, right? And we're going to be looking to limit out before the D extension anyway. If the market exceeds that, again, we're going to be paid, so that's not our problem. But before we draw the new ABCD, we're going to be looking for the market to fulfill the D extension and confirm that the ABCD has been completed with a high 2 to the left, 2 to the right in an uptrend, or a low 2 to the left, 2 to the right in a downtrend. Right? Any questions on it? So let's circle back to the C, right? This is very, very important information that needs to be known. The A and the B, the AB boundary, are constants and does not change, right? So realistically speaking, although we don't ever want this to happen, but I want you to be aware that it is entirely possible for the market to dance about inside the AB boundary or even beyond the AB boundary forever. Okay, the AB boundary can continue forever. There are only two reasons why your AB boundary will change. The first is if your D extension is fulfilled. That's what we want, right? For the market to go from C to D, and that's how we capture profit. Once the market goes from C to D, as we discussed, and confirms the D extension, we draw a new AB boundary. C becomes A, D becomes B, and we can continue. If the market goes all the way down and touches the A, right, that means the C goes all the way down, the market continues to retrace, and eventually touches the A, either by touching the exact A price point or going beyond it. Then that takes out your A, and we're going to be looking at that as a reversal, right? But traders, and this is something that gets traders all the time, the AB boundary will not change for any other reason. So traders that have just learned about the ABCD Fibonacci's in the Ultimate Traders package will sometimes see a situation where the market does this and creates a higher high, higher than the B, and they will assume that this is an A, B, C, D. And so they will either be looking to draw a new AB boundary, or they will even resize the current AB boundary. That would be absolutely incorrect, right? So the AB boundary will not change unless the market retraces all the way down to take out the A or the D extension is fulfilled. Is that clear? George says the auto fib sometimes resizes. George, I have not had that happen to me once. The only time I've seen the auto ABCD resize itself is if the AB boundary has not been confirmed, right? And we'll get into that in a bit. But what you're saying is the only time I've seen that happen is when you've got a previous Fibonacci get fulfilled, right? So you've got an A, B, C, and the market has hit the D extension, and the auto fib is already identifying where the next AB boundary is going to be. But this does not have 2 to the left, 2 to the right, right? So if the market were to go up higher and then confirm a high with 2 to the left, 2 to the right, the auto fib will resize itself because it must attach to a high, 2 to the left, 2 to the right, right? But that's the only reason why it would do that, because it has to. Does that make sense? We're not going to randomly be resizing ABCDs left and right, because if we continue to do that, we'd never fulfill an ABCD. Right? If every time the market created a new higher high, I change the B, I change the B, I change the B, then eventually my AB boundary just becomes this massive thing, and it's never, ever, ever going to be fulfilled as long as the trend continues. And if the trend were to come down, take out the A, then I'm just going to change the direction, and then I'll end up with the same problem in the opposite direction. Make sense? Great question. All right. Now, Deb says, sorry, when does C get fixed? Deb, another excellent question. Right? As traders, as people that are getting ready to put our money on the line, what we typically do, or what we want to know, is where's my guarantee? Where's my 100%? How do I identify without fail the C? And I have to be the bearer of bad news here, but there is absolutely no way to know what your final, quote unquote, what your final C is. Right? There's no way to know. The only way that you find out whether or not that's your final C is when the D extension is fulfilled. So in hindsight, that's how you know, unfortunately. Right? So realistically, what we're doing as traders is we're making the best decision that we possibly can with the information that is available to us. Right? So right here, right now, the C is going to be the nearest point to the A after the B. That's the definition of a C. It's just the nearest point to the A after the B. If the market should come down to a lower point, then I'm going to have to readjust where my C is, and I'm going to have to take a look at where that stands with respect to the Fibonacci, and I may have to readjust my projected D expectation, right? Which is why when we look to enter into the market, this is currently, that's why I said, although we've identified the C, we don't have an entry, right? When we talk about in the Ultimate Traders package, you get in at C and you get out at D. What we're talking about is we wouldn't, okay, for example, this is an bullish AB boundary, right, Deb? This is a bullish AB boundary. So if this is a bullish AB boundary, what do I have the highest percentage chance of profiting off of? A candle that says the market's getting ready to move in the direction of the trend, or a candle that says that the market is going to move in the opposite direction of the trend, according to what we've learned in the UTP. With the trend, right? I've got the highest percentage chance of making money with the trend, right? So right here, although I've been able to identify that this is the nearest point to the A after the B, would you feel comfortable jumping into a position? The general trend direction is bullish. Would you feel free buying this with a candlestick formation that is bearish? Right? Not at all. Right? Not at all. I have when it comes to candlestick formations, it can be a little scary at first because you hear all these crazy names of what the heck's a hanging man and what's a piercing line and what? Right? It's a little scary. But the reality is, if you cut out all the BS, all the fancy frou-frou names, there's realistically three things that you can realize very quickly about candles. Right? There's only three words in the language of candles. There is a decision bullish candlestick formation, which means I'm going up. There is a decision bearish candlestick formation, which means I'm going down. And there are all these indecision candlestick formations that mean I don't know. That's it. That's it. Right? So naturally, if we're, just like you said, brilliantly by the way, if we're in an uptrend, I'm going to be looking for a signal from the market that agrees with the uptrend. I'm going to be looking for a signal that says I'm going up. Right? And so we've identified here that this is currently the nearest point to the A after the B, but it's failing to give me the you may want to buy along with the trend right now. It's not quite agreeing with us right now. So we would wait for a candlestick formation that agrees. Now, as it turns out, this has now given me, this is the low right here of this candle, 0.9347. This candlestick formation, low of 0.9345, is slightly lower than where I currently have my C. So this would become my new C. But this is also a bullish decision candlestick formation. This is the signal from the market that the market's getting ready to move in my direction. Perfect, Deb. It is absolutely a bullish engulfing candlestick formation. right? It's absolutely a bullish engulfing candlestick formation. So it is in the direction of the trend. It is at this point in time that I can consider entry. Right? In this case, this just so happened to be lower, nearer to the A after the B. Right? This just so happened to be. This is not always the case, right? So this could have been a situation where the wick was down here in this candle, like this, and then I got the bullish signal, right? So in this case, if this would have been it, this would still be my C, right? And then based on this retracement, the market's touching the 8.6. So the projected D target would be where? Excellent. Green to green. Perfect. So it would be here, the 1.18, yeah? That would have been my D target at that point in time. I still would not have gotten in until this candle appeared, despite the fact that this is my C, right? I can't get in until I get the signal to get in. So this is where I would have participated with the buy. That make sense? George says, but less risk. Yeah, exactly. It would have been way. It would definitely be way less risk if I would have gotten in here as opposed to getting in here. Way less risk. However, this is not a decision candlestick formation, right? So we look to get in at the decision candlestick formation. If you're real aggressive, and this would have been the case, this could be considered a bullish shooting star. But again, that's it's an indecision candle. That it could have very well been a continued bearish move, right? And it could have very well turned around and taken out the A. So we're looking for the decision candlestick formation, right? This is decision followed by an indecision candle followed by a decision candle. The decision candle is, this is a giant morning star. It's a really big morning star on a daily time frame. All right, any questions on this? I don't want to get too heavy into entry because I want to make sure everyone knows how to plot the ABCDs first. But does everyone understand what it is we've just looked at here? Excellent, Deb. Absolutely. Right? Excellent. That's exactly what we look for. Right? We're looking for the larger time frame to give us these signals. More than likely, if you start adding some indicators like the stochastic RSI, you would probably realize that this is oversold right now. So with this at a level of support being oversold, I can absolutely go to the smaller time frame and start to look for the earlier signals. Excellent. Right, with less risk, with better equity management, and looking to take advantage of this general move, trying to eat this shark with smaller bites. All right, so here's my C retracement, then the market gives me a slightly deeper C. I adjust my C, and the projected D target, this did not touch. This is 44. This is 45 right here, so it didn't quite touch that price. Projected D extension remains the 1.618. There the market hits the D extension. Can I draw a new ABCD right now? Not yet, right? The fractal is cheating, all right? The fractal already knows the future, right? Because this is older information. So this is cheating because the fractal is already there, right? But at this point in time, had this been current, that fractal would not be there. It would not appear until I got 2 to the right. Once I got 2 to the right, then I have the full ABCD, right? And once I get the full ABCD confirmed with the 2 to the left, 2 to the right, then I can draw my new AB boundary, right? A to B, B to C, C to D. Make sense? This is my completed A, B, C, D. Excellent, Deb. Excellent. Now that this has been completed, now I can move on, right? This, when it gets completed, this is known as the actual D. Once it gets confirmed, this is known as the actual D. 2 to the left, 2 to the right. Exactly, George. Exactly. Now that this is A, B, C, D, and everything has been confirmed, now C becomes a new A. the D becomes a new B. The actual D, right, becomes a new B. Right? And I can draw a new Fibonacci. And I'm going to go once again from A to B. So from my A to the B, I've got my brand new Fibonacci in place. So based on what we discussed in the last section, if I have an AB boundary, isn't it true that I will always have a C? Right? With the information that I have available here, do I have a C? Can everybody see the C? Yeah, right? It's going to be the nearest point to the A after the B. So this currently right now is my C. Does anybody feel comfortable in looking to jump into a buy position in the direction of the trend with a candlestick formation that's that flimsy? You shouldn't. Good. All right. Mohammed says, so I should wait 8 hours to know the actual C and the actual D. Mohammed, in that case, yes, we're looking at a very large time frame here, right? So you wouldn't, if you're asking about entry, right, you're not going to wait for the D extension to be fulfilled before you identify the actual C, because then you would miss every single entry opportunity, right? So the reality is that we're looking to enter in with the you're trying to make the best decision that you can with the information that is available. So if I'm in an uptrend and I see a decision candlestick formation in the direction of the trend, I'm going to look to buy that in the direction of the trend, and I'm going to put my stop loss below the A, and I'm going to look to go for the D extension. If that makes equity management sense, I'm going to look to take that position. Does that make sense? As far as drawing my new ABCD, I must wait for the confirmed high. In this case, since it's a 4-hour chart, yeah, you would have waited 8 hours. If it's a smaller time frame, you wait less. If it's a larger time frame, you wait more. Deb says, so the candlestick pattern will give us C. Deb, as of right now, since this wick low right here is within the AB boundary, right? These two black lines represent my AB boundary. This is where the market is expected to play around. Remember, the market can go on forever inside the AB boundary unless the D extension is fulfilled, or the market comes all the way down here to take out the A, to touch the A price. The market can realistically dance about in here until the end of time, right? So the C must always be, out of all those candles that may potentially appear here, the C must always be the nearest point, the nearest price point to the A after the B. So since this candle wick low is currently the nearest to the A price after the B, this is currently my C. George says the market takes the time they want. It takes all the time they want. There's nothing to do if the A is not broken or the D is fulfilled. The trade is alive. Absolutely. As long as it doesn't take out the A, it should go its Fibonacci way. As long as it doesn't take out the A. Correct. Deb says, so no matter what, lowest near the A, always a C. Enter after C if we have a pattern. Deb, here's an extreme example. Let's say that this market right here, let's say the market comes down, because equity management is what's going to be the make or break, right? So let's say that I did get an entry right here, a bullish decision candlestick formation, just like we got the last time, big bullish candle. What's the, I'm trying to avoid turning this into an entry discussion, but if this were the case, according to the rules of the UTP, I'd have to look to enter in at the close of the candle, right? The candlestick formation must be confirmed. So once I get the candlestick formation closed, and I know it's not going to change on me, it is in fact a bullish signal. The market is saying I'm going up. So if the market's saying I'm going up, then I want to go up with it, and I want to buy it. I would have to look to buy this market right here. But according to the rules, I have to place, when trading Fibonacci, according to the rules, I'd have to place my stop loss down here below the A. 10 pips below the A. And according to the rules, I'd be looking to limit out, not directly at the D extension, but 10 pips before the D extension. So here, at 60. Can you see a problem here with this entry? Excellent, Deb. The risk to reward is horrible, right? If I'm getting in here and my stop loss is way down here, I'm risking way more than I stand to gain. This looks like I'm risking almost between 3 and 4 to capture 1, right? This is a 4-to-1 almost equity management. It's terrible. Cannot take that kind of risk, right? So it would not be a trade that I would be able to take. What if the market gave me the bullish candlestick formation down here? Then this would be my C, yes? I'd be looking to enter here with this as my risk, and this is my potential reward. I'd be looking at a much better situation, right? Much better situation. That's how I want it to be. What if I did enter and then the market came down to a lower point? I got in there and then the market decides to do this. That's not something any of us want to happen, right? But the reality of the situation is that it has. So if the same thing occurs, right, I'm still going to have to adjust my C. Unfortunately, my entry was up here and the market decided to come down to a deeper C. I'd have to take a look at my C, realize the market has touched the 8.6. The target now needs to change to the 1.18, right? And now I'm just going to hope the market continues in the direction of the bulls toward its target. Right? As long as the market has not taken out the A, it should continue in its Fibonacci way. If it does limit out, then I'm going to be looking at some profit, just not as much as I originally set out to be. Right? Exactly. As long as the stop loss doesn't get taken out, if it hasn't taken out the A, it should continue its Fibonacci way. Any questions on that? Exciting, isn't it? Deb says, this is the first time that I'm getting some understanding. That's what we do here. That's what we do here. It can be a little challenging. Definitely. The ABCDs, in my opinion, and I've been doing this for a while, in my opinion, the ABCDs are the first major hurdle to being able to understand the education. And the next big thing is going to be the King's Crown, which we're going to be talking about next, the reversal pattern, right? To put it simply, when it comes to the to the reversal, right? And we're going to talk about this in detail in the next segment. But when we're talking about the reversal, and actually we have to transition over to that like now. The webinar is supposed to be over. If the market takes out the A, we're going to talk about the specific reversals. If the market takes out the A, then we'd simply stop drawing the ABCDs in one direction and start to look to draw them in the opposite direction. Right? That's it. That's as complicated as that needs to be. Right? There are warning signs, though, that we're going to talk about in the next webinar. There are warning signs, though, that we can look to pay attention to and even maybe be able to participate in the opposite direction if we understand the King's Crown. But when traders start to learn about the ABCDs, or when traders start to learn about the King's Crown, they forget that they're exactly the same thing. And as a result of that, they become quite confused very quickly. Okay, so we're going to be getting to the bottom of that in the next segment. Just make sure all this boils down to, guys, is the rules, because the rules don't change. So if at any point in time you become disoriented, reference your rules. Just reference the rules. This is not neurosurgery, right? It's just spatial, right? And spatial intelligence can be learned. We're just looking for where the market is in relation to the AB boundary. Wherever the deeper point is, that's going to be my C. When the market gives me a signal that aligns with the trend, that's going to be where I'm looking to get in, and I'm looking to go from C to D every time. Once the A, B, C, D is complete, C becomes A, D becomes B. You get disoriented, reference the rules. Where am I? Okay, I've identified the C. Has the market fulfilled the D extension? No. Has the market taken out the A? No. I don't have a new AB boundary. Make sense? Well, if that's the case, Deb, not to worry. That's what I'm here for. I have my BS trim machine, and we're gonna get rid of all the BS. We're gonna make it nice and clear. So feel free to ask any questions you need. All right. We're going to take a short break, ladies and gentlemen. We're going to come back at 10:30 p.m. Eastern Time for the discussion of the reversals. All right. Again, if you need this, you can feel free to screenshot it or you can download it directly. I'm going to leave the webinar up for about another 30 seconds so you can download it from the handout section. You can download it directly and you can reference this, and I will also make it available in the next webinar presentation when we talk about the King's Crown. I'll see you all very, very soon.